Live stream going on right here, and I'm just checking out some of the markets for us as we do this. So just give me a sec as we do that. As you can see, that's that ugly chart behind you, right behind me, I guess, is the S&P 500. I'm going to shorten down our time frame and take it down to 5 days so we kind of see where we've been. And there you see some of those lows that we're testing at. We're at 2749.67, down 4.6% right now. So that's where we're at. I wanted to go live with you because I wanted to talk about a couple things. Number one, I wanted to let you guys know that my two rules during the sell-off right now are as follows. One, I never turn a trade into an investment. The reason I say that, and I am saying it with a lot of conviction, is that if you're trading, so let's say you're not at Robinhood, because those guys aren't trading, but if you are trading and trying to catch some of these moves, it can be very profitable. If you're on the wrong side, it can be very painful. But as I said on the halftime report, and as you may have heard me say last night as well on our broadcast, I buy on big down days and I sell on big up days. Now, those are my trades. So keep in mind and maybe focus in on what I'm telling you there, folks. I'm saying that when the market drops 1,000 points like it did today, I am not the guy selling. I am the guy buying on the depths of that drop, which I did today. And I am the guy on Monday who did the same thing and then put up my video and said, okay, now keep in mind some of the best opportunities are created by exactly this kind of environment. So I stand by that. If you want to push against it, feel free. But I think not only my history, but the history of trading from Warren Buffett, if you want to call that trading, I call it investing. I think a lot of folks are being exposed right now. And as he said, you know, when the tide goes out, you see who's swimming naked. There are a lot of folks naked right there now, and there's a lot of folks who are in a great position to cash out of a lot of what they've put on. One of those people is that guy 50 Cent, guy or gal, whoever you are, 50. Thank you. We can always tell 50 because he or she is always buying 50-cent options in the VIX, VIX. And they're not really doing so much the VXX, and they're not doing the TVIX and things like that. Whoever this person is trading directly in the VIX, and that person has been selling, and you wonder why? Well, I think we all know why, because this has been a fantastic opportunity. In fact, those 24 calls that I talked about in March that he purchased or she purchased for 46 cents, I think they were trading for like 24 bucks today, folks. So again, that's 48 times your investment. And that's something that is one for the record books as far as trading. Now, so I buy on big down days, I sell on big up days, and I don't turn those trades into investments. So if I buy, as I did, Apple and added to it on the 28th, I apologize, of February, and was lucky enough, smart enough, lucky enough, none of us know which I was, but I'll go with luck. And I was able to buy Apple at a very good price. That was a trade. I already owned Apple, and I added to it on that day. And then I traded, out as it traded through 295, which was a phenomenal jump to the upside. And then I have reloaded, sold out that batch, reloaded, and I don't mind doing that. But you have to know what you're doing when you're doing that, folks. And you also have to understand that whether or not you're trading in a taxable account or the account that I was trading in was a Roth IRA, and I was able to trade that at no tax, no I don't owe it any time. As you guys know, you get a deduction for putting in a regular IRA. If you do it as a Roth, you never pay taxes on it. It is your gain completely. The government doesn't share in your profits. All right, so let's take a look at some of the things that I wanted to talk about today. One of them is that we saw a pretty significant move in the VIX once again. And that's because the SPY, has had some pretty significant moves. Now, as you know, the VIX isn't just an esoteric thing. The VIX is calculated by the constellation of calls and puts. So calls to the upside, puts to the downside, not just the at the monies, but a whole bunch of others. And then it rolls from one expiration to another, meaning that as we get closer to expiration, we start counting more and more the next expiration in the calculation that turns out to be the VIX. Then you've got the VIX spot, and that is, like I say, the spot price of the VIX. That is something that more or less, when you hear us quoting it on television, that is the spot price of the VIX. It is not what the VIX future is. It is not what the March contract is, and so forth. So let me go over here and maybe pop up a quick one on VIX. So here is VIX today. Let me give you a 1 day. That's a 5-day roll. Here is a 1 day on the VIX. There you see it this morning, trading through 55, right about there. You see it trading up towards 56, and then you see a subsequent pullback into the mid, let's call it 52 range, and then almost here, about during halftime before the WHO came out with their assessment that it is indeed a pandemic, something many of us have been saying for a while. By the way, I believe they endorsed my view, which I had expressed twice on CNBC, which was that there will be tens of thousands, if not hundreds of thousands, affected by this, that this being corona or COVID-19. Seems like Dr. Fauci has said the same thing. Tens of thousands, hundreds of thousands, perhaps millions of people. And some of the ways that it will be treated will not be a vaccine to prevent it, but rather will be a treatment for people who get it. So if you have a fever as well as that dry cough and things like that that are associated with COVID-19, those people will be given some sort of a treatment in all likelihood in the next few weeks as we wait to hear how have the tests gone in China, Korea, Japan, as well as United States for a cocktail. And hats off to Carrie Firestone, who on the halftime today was saying, look, we're probably going to have a treatment with Gilead or some of these others in a cocktail form. It's not the same as a vaccine. Now, what I'll point out about Carrie, folks, as I tweeted, was that Carrie was, I believe, the head of biotech at Fidelity, meaning she traded a portfolio of billions of dollars of biotech stocks. There are a few people, I'm not saying she's an infectious disease expert, but there are a few people better versed in which biotech stocks offer a possibility of a treatment than Carrie Firestone. I also happen to like Carrie, so toss that out to you, Carrie. Now, let me pull up some of the other things I wanted to talk about, folks. In 2015, the VIX traded over 40. It did that on, here, I'll push us back. Why don't I bring us back? This won't, that's January of 2018 there, July of 2018 and so forth. And there is, these are all in 2018 fashion. That's that big spike you saw as Christmas, the Christmas disaster or Christmas massacre, when December 24th, that holiday shortened session, we had that huge drop. Well, that huge drop in the market corresponded to a high print in the VIX, and there it is right there as we traded to 36, and then luckily quickly bled off from there. Let me show you this particular August print. So there you see August, us also trading up to and through about 36 there on the wall behind me. And that was a print August 25th. August 24th and 25th, we traded over 40. Thank you. And we did not fall below 20 for about 30 trading days. I don't know if it'll take that long since these moves are so exaggerated and so fast, but they've done a lot of damage to investor psychology or psyche, just like any big dump does. When you have a big downward whoosh, whether it's that move in August of 2015 or whether it's that Christmas Eve massacre, December of 2018, either of those, generally you have vol stay high for a period of time as people get used to that shock. And then when they don't get a greater shock, that starts wearing off faster and faster as we go along. Now, the real test in the VIX was in 2008. The VIX spike reached 30. Pardon me. And by the way, I went in yesterday to a care clinic, even though I've not had any fever, touching up here, no fever, have had a productive cough, so that's known as a wet cough, not a dry cough. The two things you really need to be concerned about are the dry cough and the temperature as far as COVID-19. Doctors gave me an inhaler to take care of it. So that's what I've been using the last couple days, as that inhaler will cause my bronchial passage and so forth to enlarge, because apparently it had shrunk because of a virus, but not the COVID virus, luckily for me. Now, the VIX in 2008 on that big spike, that held for a very long time. And we traded up for almost 330 days. We were over 20 in 2008 as we, hit that panic, and we had the election, and then we had the bottoming in about March of 2009. Sorry about that. So those are all things, folks, that are out there for us to be aware of. Now, one that I'd like you to take a look at, I'm going to put it up here on the chart behind me, is EWZ, because in here, this is the Brazil ETF. We saw them coming into this one to buy somewhat aggressively calls in the EWZ. So let me get that. Let's get go. Does it want to freeze up on me again here? Maybe. Well, doesn't seem like that wants to move. At least it's not moving on my screen here. So unless I can get it up here to move EWZ, let's see if I put it up there, if it'll do it. Yeah, here we go. All right. So here's that EWZ. And let's look at a 1 month of the EWZ again, Brazilian ETF. Here you see it. The most recent time we were up was about a 44 reading, February 19th. We have traded down now through 30. And yet they're buying June calls and they're paying 90 cents. So that's worth noting, because this is the sort of behavior I expect on big down days. Are smart options traders coming in and risking a little for a potentially great reward. They're picking one that is 3 months out into the future. Those are the June 37s. And they're paying for those just about 85 cents. So that's one of the reasons that I'd like to be watching that. Also, Hilton. I bought some Hilton today. Probably not all that pleased with the purchase right now, but I'm disclosing to you that I did purchase it. Here it is at roughly 84, which is more or less where I bought it, so that's okay. They came in selling puts in Hilton today, folks, that have an expiration in March. So these are March expiration. They sold 3,000 of the March 80 puts. So when people come on CNBC or elsewhere, not denigrating anyone, but when they come on and say, I like it, but I like it $3 lower. Well, if you're selling these puts for $3 and the stock, or in this case, Hilton stock is trading at 84-ish, and you're collecting over $3 in premium for the 80 puts, that means effectively you're paying $77 for that. $77 for those if you're forced to buy the stock, which is right now $7 lower than where the stock is. So you get a little downside protection. You're basically being forced to buy the stock if it drops another 9%. And as far as Hilton, look at the year to date on that bad boy. We're talking about a stock that presently is 84, but just take a look here. Just the 20th of February was 112. So obviously somebody's talking with their, investing with that in mind, that it was significantly higher not long ago. So those are two unusual activity trades I wanted to bring up since they had just handed me this one. At Gballer wants to know, what sectors are you looking at, and thoughts on oil. My thoughts on oil are that we will see a pretty big move, snapback move in the not too distant future for XLE. Let me put that in up here, XLE. So rather than the production side, which is XOP, I'm looking at the XLE. And when you look at this one, folks, again, just let's shorten it up to a 1 month time frame here. Which was March 4th, we were up at 47, and now we're talking about 33. Now, we all know why, and this big drop that occurred within the last 5 days, and it occurred because Saudi went after the Russians and U.S. shale, I guess, pretty hard, and that's what took us down to here. At 33, let me take a look how far back I got to go. That's a 3-year graph. Here's a 5-year graph. If I go all the way back down here into a 10-year graph, we haven't seen the XLE down here at these levels in quite a while, my friends. So all the way back to 2010, we're looking at lows that were maybe in that 50 range. So this is a pretty G-baller. I think you're right. Probably time to start nibbling a little in that sector in particular. And we'll see exactly, it's like Cleavon Little in Blazing Saddles when he puts the gun to his own head and says, I'm going to kill him. I'm going to kill him. I don't think the Saudis ultimately are going to kill themselves, but they are strangling that market hard right now, trying to show them who's boss. So we'll see how that plays out. Dr. Gerald Kerwin, that's at Dr. Gerald, Jeral, Kerwin, Kirwan. Thoughts on Target. Like Target. I like that they do have the delivery services, which I spoke about on CNBC. I'm going to shorten that thing up because that was a 10-year. Here is a 1 month. Target at 103. Here you see the February low. The 28th was basically right here, right around 103. So I have written aggressively calls at the 100 strike against my target. Happy I did when I did it. A lot of those have burned off their premium, and I've rolled them out. What does that mean, folks, when I say premium has burned off? As time goes by, that's in your favor when you're a seller. So I took advantage of that. And now I'm putting stuff back on, selling out those. With that said, one more sip. I'm going to try to get Chris Irons on this afternoon. Chris Irons, Quote the Raven. I'll be tweeting that out. Make sure you guys check that out, because if I can get Chris on, I think it'll be a fantastic event, and we'll get him on